Welcome to LIFO. You had so much fun with FIFO that now we're going to try LIFO. We're going to use the exact same example so you're familiar with the problem, but now we're going to assume that the last units in are the first ones sold. It's kind of like we don't rotate our stock. And I think I've alluded to this example as being chairs. Well, a company typically would not rotate their chairs because they're not perishable. Although it really doesn't matter. You could actually use LIFO as a costing method for bananas. Obviously, we hope that stores rotate bananas because they go bad so quickly. But what we're doing on paper for accounting purposes does not have to be consistent with what is actually happening in our inventory. And so you could use LIFO for bananas, for accounting purposes anyway. Okay, having said that, let's go ahead and work through the same example, but with LIFO. And you see on the slide here, I went ahead and drew out our beginning inventory, our first two purchases, and right on down to the sales of 70 units. Since we're assuming the last in are the first out, we're assuming that we're selling these 50 units, the 50 last units that cost us $24, we're assuming that we're selling them first. Once we've used up the last layer, we go to the next to last layer, this batch that cost us $23. Well, we sold a total of 70, so we need to dip into this layer to the tune of 20 units. So that's why I put over here in cost of goods sold 20 units at $23. Okay, so we've recorded our first sale. Now, we need to redraw our inventory, just like I said under FIFO. Every time you make a sale, you need to redraw your inventory from earliest to latest. So this is what it would look like after the sale. We assume that we still have all of our beginning inventory. Those are the oldest units. We have 60 at 22. And as you recall, we assume that we sold 20 of those that cost us $23. So we still have 20. There were a total of 40, so we still have 20 of those that cost us $23. Okay, now we made another purchase. We made the purchase on the 17th, so now we have 3 layers of inventory: the beginning inventory, the December 6th purchase, and the December 17th purchase. And then we made a sale of 90 units. Okay, put me on pause again and go ahead and calculate which 90 units we assume that we have sold. All right, you've done that. Let's show the answers here. And you can see that, again, we're assuming we sold the oldest ones first, the last in, first out. So we assume that we sold 20 of those that cost $25. We assume that we sold all of the next batch, the 20 at $23. That's a total of 40. We got 50 to go. So then you can also see that we have dipped into the beginning inventory to the tune of 50 units we assume we sold at a cost of $22. And so again, we're just assuming the last ones are the first ones out. Now it's the end of the accounting period. Now we need to calculate what's our cost of goods sold for our income statement and what is our ending inventory for our balance sheet. And here are the answers. Our ending inventory is all we have left is those 10 from our beginning inventory. Our cost of goods sold, again, is where we take the sum of each of these figures we've already calculated here, add them up, and in this case, it comes to $3,720. And that's it. Those are the figures that will go on our income statement and our balance sheet. Now, one thing I just want to make sure is clear to you. What we are doing here on paper is not necessarily exactly, well, it's not only not necessarily, it is not exactly what's going on in our warehouse. We don't know which chairs we sold. We know how many we sold. We know how many we still have. We definitely still have 10 chairs. Under LIFO, we're assuming that we still have 10 of those chairs from our beginning inventory, so we're putting a dollar value on it of 220. Do we exactly have the 10 chairs from our beginning inventory? We don't know. Again, we've got 10 chairs, but they all look alike, so we don't know exactly which ones we still have. So we're making assumptions here. Under FIFO, we assumed that the 10 chairs we still had were from this $25 purchase. That's why under FIFO, I believe we had a $250 ending inventory. Under LIFO, did I say LIFO? Under FIFO, we assume a $250 ending inventory. Under LIFO, a $220 inventory. Which one's right? Exactly right? We don't know. We're making assumptions here. So that concludes our LIFO video. The third and last video in this chapter will be on weighted average, and that's probably the one that's going to cause the most trouble in terms of computation. So we'll see you in the next video.